Members of Business Leadership South Africa met with Deputy President Cyril Ramaphosa earlier today. Before the meeting, Ramaphosa said he was keen to hear the possible solutions that business could present, and we're waiting for the outcome of that meeting. Let's get a global investor perspective now. We're joined on the line by Razia Khan from Standard Chartered Bank. She's based in London at the moment. Razia, it's great to have you. Was the S&P downgrade of Eskom a surprise yesterday, coming after Moody's earlier downgrade?
Well, we had already seen the ratings action by Moody's, so from that perspective, not entirely a surprise, but given that, it still did serve to focus a lot of minds on what everyone knows has been a problem. It's been building for some time, and suddenly that very real risk, the fact that Eskom will find itself in a position where it's more difficult to finance itself, where this possibly raises the kind of support that it may be requiring from the government, that has implications of its own. All of that took center stage.
Isn't it slightly strange that Eskom has its own rating when, as you say, it gets a lot of support from government, government backs that debt, and government has a higher credit rating? Will investors not look at that?
Not necessarily. What the ratings agencies look at is, first of all, the level of support that might be given to Eskom, given that it is a government-owned entity, but they also need to make a judgment about just how much support they can reasonably expect. Now, outside of that, there is also a standalone rating for Eskom based on its own financials. If we were to assume there was no government support in place, what would Eskom's creditworthiness look like? And it's not particularly suggesting a very pretty picture at the moment.
Razia, looking at the reasons put forward by S&P, there seems to be, and I wonder if you agree with me, some suspicion about the suspension of those four executives. At the time, it was said the CEO was quite new. Many of the issues raised were ongoing. People have wanted action, but now that it comes, it does seem a bit strange to investors, I think.
I think the concerns have been much more long-running than that. First of all, there isn't an adequate understanding of precisely why we see the level of problems that have arisen at the state-owned enterprise. Why is it that Eskom is in the situation that it is in today? On top of that, there has been the disappointment where there were expectations that come 2015, things would look materially different. There were expectations that South Africa would in fact be benefiting from rising power supply. Suddenly, the country is faced with a situation where it faces the threat of perhaps more severe outages that could pull the rug under from economic growth once again. And it's a combination of those factors, long-running issues not really having been adequately resolved in the past, still what seems to be presented, especially to investors, is a lack of complete understanding about exactly what has been going on and what the proposed solutions are, and recent events with the changes at Eskom not really helping to instill any sense of confidence that these problems can be quickly resolved. So this is a long-running issue. It does pose a serious threat to the South African economy. There's been nothing in the recent past on which to base the assumption that things are suddenly going to start looking better. From that perspective, the ratings action isn't difficult to understand, but the concern now must be what it might mean for the sovereign. Perhaps not immediately, perhaps not in the very near term, but further out.
Well, that's what I was going to say. Are we looking at sovereign downgrades? How soon could they come, and very quickly, what are the implications?
Well, there are differences, of course, in the way that South Africa is rated. It's rated a notch lower by S&P, but S&P have a stable outlook on their rating. Fitch, on the other hand, has a negative outlook, is due to review its South Africa rating later this year. If we should see a material deterioration in growth, that would be seen as pretty negative. It would make a lot of the issues that South Africa faces, whether that is the immediate issue of where the debt ratio is likely likely to peak, or whether it's some of those more long-running structural issues. The South African economy needs to be growing, especially in per capita terms, much faster than it's been growing. If you add to that the potential negative that the state, already having ring-fenced its funding for Eskom, having come up with a plan, we've yet to see full execution of that plan. But what has been promised is that this won't impact the budget numbers. If that should change for any reason, then South Africa could be viewed much more negatively. So no one is thinking that South Africa loses its investment grade rating anytime soon, but the risk of at least a one-notch downgrade could well gather momentum if we don't see a meaningful turnaround in the growth performance.
Thank you so much for your analysis, Razia Khan from Standard Chartered, based in London. Let's get some tweets now, some reaction on social media. And as you heard in our earlier insert, this comes on the back of reports that Eskom will in fact be asking for more money. The NERSA, the regulator, says it hasn't received that request yet, but some scathing outpourings following that potential news. Nick says increased tariffs won't help Eskom running their business. Will use less electricity. Most people can't afford increased tariffs. Others simply don't pay. Carmen, we're already paying for a service we're not getting, and then we need to pay more. No wonder their status is junk. Andisha, this was expected. Money should have been used to maintain and expand the system and to accommodate increased demand, not flaunt.